Hello and welcome back to Money Gist CBN edition, bringing you all the updates from the topmost monetary authority. Just days after the Central Bank of Nigeria ended its bank recapitalization exercise, the International Monetary Fund has stepped in with a strong endorsement of the policy. Speaking at the World Bank and IMF spring meetings in Washington, IMF Financial Counselor Tobias Adrian said, the recapitalization has strengthened Nigerian banks and is already proving its value by building buffers against global economic shocks. In simple terms, it means banks now have more capital to absorb stress and stay stable when the global economy gets rough. The IMF explained that this kind of financial strength is exactly what helps protect banking systems during crisis, especially as global risks continue to rise. On growth outlook, the fund projected Nigeria's economy to expand by 4.1% this year and 4.3% next year, while warning that inflation pressure remains sensitive, especially due to oil price shocks. Globally, growth is expected to slow to 3.1% this year and 3.2% next year, as wars, inflation risks, and tighter financial conditions weigh on economies. But the IMF also warned that prolonged conflicts, trade tensions, or weaker productivity could derail this outlook, urging countries like Nigeria to stay flexible, manage inflation carefully, and strengthen policy coordination. Nigeria's central bank is deepening its push for a more stable and inclusive financial system as it strengthens ties with the Islamic Financial Services Board (IFSB). On the sidelines of the IMF and World Bank spring meetings in Washington, CBN Governor Olayemi Kadeso met with IFSB Secretary General Giath Shapsig to expand cooperation on Islamic finance. The discussions focused on technical support, capacity building, and stronger regulatory standards to improve financial stability in Nigeria. Kadeso says the CBN is committed to building a resilient financial system where Islamic and non-interest banking can help expand access to ethical finance and attract more investment. The IFSB also praised Nigeria's progress and pledged continued support. Both sides agreed to deepen collaboration to strengthen institutions and promote sustainable finance growth in Nigeria. Nigeria is making a fresh move on the African financial stage, and this one could shape how money moves across the continent in the future. At the just concluded IMF World Bank spring meetings in Washington, D.C., Nigeria has restated its commitment to host the African Union's planned African Monetary Institute, a key step towards deeper financial integration in Africa. The idea is to build a stronger coordination between African countries on monetary policy, reduce economic instability, and prepare the ground for a more unified financial system in the future. According to the governor of the Central Bank of Nigeria, Olayemi Kadeso, represented by Deputy Governor Mohammed Sani Abdullahi, Nigeria says it has moved from promises to action. An office facility for the institute has been provided in Abuja and is ready for inspection. The Finance Minister, Olawale Edun, also confirmed Nigeria's readiness, saying the country is fully prepared to provide political and logistical support ahead of the September 2026 launch. The African Monetary Institute, approved by the African Union, is expected to improve economic coordination across African countries and support long-term plans like a future single currency, building on the African Continental Free Trade Area framework. Experts from the African Development Bank, including economist Kevin Urama, say the project could strengthen financial stability if properly implemented, while learning from systems like the Eurozone. With this move, Nigeria is positioning itself as a central player in Africa's next big financial integration push. The Central Bank of Nigeria, CBN, has just introduced a new interest rate system called the Nigerian Overnight Financing Rate, NOFR. Now, what does that mean in simple terms? Think of it like this. When banks borrow money from each other overnight, there has to be a clear official price for the borrowing. That price is what NOFR now represents. CBN says this new rate will make Nigeria's financial system more transparent, more stable, and easier to understand, especially for investors and banks. It will also help the CBN control inflation better because changes in interest rates will now reflect the real market more clearly. Nigeria is now joining countries like the US and UK, which already use similar systems. CBN will manage and publish this rate regularly to guide the money market. If you've ever taken a loan in Nigeria and had issues with your bank, this update from the Central Bank of Nigeria could change everything. Right now, if a borrower and a lender have a disagreement, maybe over collateral, repayment, or seized assets, the next step is usually court. And we all know court cases in Nigeria can take years and cost a lot of money. But the CBN is trying to fix that. They are proposing a brand new system called a mediation and dispute resolution panel. Basically, a middle ground before court. If there's loan dispute, both parties will first go to this panel instead of rushing to court. The panel will try to settle the issue through mediation, faster, cheaper, and less stressful. And this isn't just any loans. It focuses on loans backed by movable assets, things like equipment, vehicles, or inventory under the Secured Transactions in Movable Assets Act. Even more interesting, cases must be resolved within 90 days. That's a big shift from the usual long legal battles. But there are conditions. Both parties must agree to use the panel. They must have tried to settle the issue themselves first, and the loan must be properly documented and registered. Now, who will be making these decisions? The CBN plans to appoint about 30 experts from law, banking, and finance, then select 3-person panels to handle each case. The decisions will be legally binding, meaning courts can enforce them. This move could make borrowing safer, reduce legal delays, and boost confidence in Nigeria's credit system, especially for small businesses that rely on loans. The CBN is currently asking for feedback from the public before rolling this out. If you've ever sent money through a Fintech app, traded crypto, or collected payment from abroad in minutes, then the story is about your money. Because Nigeria's central bank is now stepping harder into the world of digital finance, and they are not slowing down. The CBN says it's tightening oversight of virtual asset platforms and Fintech apps to make sure innovation doesn't turn into insecurity in the financial system. In simple terms, digital money is growing fast in Nigeria. Mobile transfers, online payments, crypto trading, all of it. But as it grows, so do risks like fraud, money laundering, and illegal cross-border transactions. So under Governor Olayemi Cardoso, the CBN has launched a special pilot program to closely monitor selected companies like payment platforms and crypto-related firms. These include big names in Nigeria's fintech space. The goal is not to shut anyone down, but to understand how these platforms work, how money moves through them, and how to block illegal activities before they spread. Companies involved will now report monthly, show their transaction systems, and comply with global anti-money laundering rules like the FATF travel rule. This could mean safer digital transactions, fewer scams, and stronger trust in fintech apps. But there's also concern that too much regulation could slow innovation or increase costs for startups. So what the CBN is trying to do is both simple and delicate, keeping your money safe without killing the technology, making life easier. The Central Bank of Nigeria has absorbed 4.48 trillion naira from the banking system within 6 days through aggressive open market operations. Data between April 8th and April 15th shows the Apex Bank carried out major liquidity mop-ups on April 9 and April 14. 2.31 trillion naira was absorbed on April 9, while 2.17 trillion naira was taken out on April 14th. As a result, banks' opening balances dropped sharply to 99.05 billion naira on April 15th, down from 135.76 billion naira the previous day. Despite this, the system remains liquid. Funds placed in the standing deposit facility declined to 3.69 trillion naira from 6.98 trillion naira within the same period, showing that banks still held significant excess cash. The data indicates a deliberate effort by the CBN to manage liquidity without disrupting financial stability. The move is aimed at controlling inflation, stabilizing short-term interest rates, and supporting exchange rate stability. Similar liquidity mop-up operations were carried out in March when over 4.1 trillion naira was absorbed in 2 sessions. Overall, while liquidity remains strong, the gradual tightening could influence interbank rates, lending activity, and broader market conditions in the coming weeks. Nigeria's economy is putting more pressure on households, and new CBN data shows people are feeling it in their pockets. According to the Central Bank's March 2026 survey, consumer confidence has dropped sharply into negative territory at minus 10.3 points, down from a positive 0.8 in February. That's the first time it has turned negative since late last year. This means more Nigerians now believe the economy is getting worse, not better. The biggest worry is coming from household finances, which also fell to minus 14.7 points, showing families are struggling to cope with daily expenses. Prices are a major driver. The survey shows Nigerians are still seeing sharp price increases, with the price perception index rising to 40 points, while average prices of key items nearly doubled compared to February. Food remains the biggest pressure point, taking up the largest share of household spending at 67.6 points, and it's expected to stay that way. Nigerians are no longer thinking about big purchases. Buying houses, cars, and appliances all remain deeply negative, showing people are holding back. Even though inflation slowed slightly to 15.06%, many households say borrowing is becoming more expensive and most want lower interest rates. In summary, incomes are under pressure, prices are still high, and Nigerians are focusing only on survival spending for now. Starting May 1st, 2026, the CBN has introduced new rules on BVN operations across Nigeria's banking system. First, only people 18 years and above can now register for BVN. This means minors will no longer be enrolled going forward. Second, banks will now place any BVN linked to suspected fraud on a temporary watch list, but only for 24 hours. Within that time, the account owner must be contacted to explain the transactions. Also, you can now only change your phone number linked to your BVN once. No repeated changes again. The CBN says access to BVN data will remain strictly for licensed financial institutions, except special approvals. So what does this mean for you? Stronger identity checks, fewer fraud cases, but also tighter control on your banking information. Remember, from May 1st, your BVN security just got stricter. Do you think that's a good move or not? Let's know your thoughts in the comments below. That's all the money gist from the central bank at this time. I'm Williamisi Dada. Remember to turn on your notification bell and be the first to get fresh updates on monetary policies that concern you. Like, subscribe, and share. See you in the next video.